Good morning, everyone. Today we will talk about the hardest question in accounting. It is about financial statements. So, just like what we talked about last episode, financial statements. So, what is financial statement? It include the income statement and statement of financial position. In statement of financial position, we record assets and liabilities. In the income statement, we record expenses and, of course, income. So today we will going to prepare an income statement. But why I would rather consider as the most difficult question in accounting for this one is because we are going to prepare the income statement of a probably an agency. So if like some business provide goods, then the income statement will be first you calculate the gross profit minus expenses if we provide goods, and we need to plus income. But for those who provide service, they do not need to purchase anything, so it's only expense minus plus income. So you may say, sir, you see the format, goods is probably more difficult because it has three terms. You need to calculate gross profit first, and you can get profit for the year. So why you consider this question about service is the most difficult one? It actually has some reasons. So first, we need to evaluate the question. It says Sadia runs an agency. Her financial year ends on 30 September. So first, just a really simple technique. If you see something about financial year, you need to write it. So she provided the following information at 1 October 2017. So we can see if the September the 30th is the end of her financial year, then October the 1st is the start of a financial year. So we can see if a financial year starts on 1st October 2017, this financial year is 1st October 2017 to 30 September 2018. So what income statement recall if we consider, we're preparing service. So what shall we record? We need to record the expense and income. And especially for 12 months. So only in those 12 months, so any prepaid amounts or accrued amount, those are current asset and current liability. What is current asset? Accrued amount. What is current liability? Prepaid amount. So those two things belongs to what? Statement of financial position, SOP. Okay, so now we need to prepare expenses and income for 12 months. So let us first look at the question. Time is at 1st October 2017. We have office equipment. We need to evaluate term by term. Office equipment at cost 26,000, and provision for depreciation of depreciation. for office equipment is, there's no is, sorry. It is 9,360. So, what we need to know about this term is it is the accumulated depreciation. So you may say, sir, why do we need like the accumulated depreciation in the, the information provided? Because accumulated depreciation belongs to statement of financial position. It is charged to find out the net book value of the asset you bought. And now what we need to do in the income statement, we need to do provision for depreciation of office equipment this year. So what method do they follow? You can see the term is it will be provided at last. The term is office equipment, I would say OE, is depreciated at 20% per annum using reducing balance method. Okay, so why we consider this question difficult is because every time you need to evaluate really carefully. So in order to ensure that those who do not know more about, what is the actually the depreciation method, I'll talk a little about it. So we imagine we have an asset was 10 grand, and we already have the depreciation for 2 grand. It is accumulated depreciation. Don't recognize it aggregate. It is not aggregate demand. It is accumulated depreciation. I need to read it more clearly because in economy there's also a term AD, aggregate demand depreciation. Okay, so 3 methods. First, most straightforward. You can see it from its name, straight line method. So uh, they will say like they charge 20% per annum. It means you use the cost of like purchasing the assets, and you got this year's depreciation, 2,000. So you need to depreciate 2,000 in the income statement because it is recognized as expense. Second, reducing balance method. What do you mean by reducing balance method? You can see from this word balance. So if also we charged about 20% per annum. So what is this? It is we need to use 10 grand, what am I writing? 10 grand minus 2,000. This figure multiplied by 20%. And it is 1,600. And this is the depreciation amount we need to charge for this year. The third one is probably a revaluation method. Yes, I think it is we need to revaluate. Yes, of course. Yes. So what do you mean by revaluation method? So first year we can, when the asset are purchased, we can we evaluate at a price of 10 grand. But this year we only evaluate at 7,000. So those 3,000 are depreciation amount, which is pretty straightforward, and we need to use this in the income statement IS. Okay, after talking about this, like revaluation method is especially for those, not like small assets like the clocks, the calculator. We do not like to charge each one's depreciation because it is too little. Okay, so after completing those 3 methods, we can see, like, I think I have mentioned Yes, office equipment is depreciated at 20%. Okay, so just like what I've told, we use 26,000 minus 9,360. We use this figure to multiply by 20%. Of course, this one you can use your calculator, and this is what CAIE would like to see, because uh, they do not want like that much, you know, error bring down, because it would be difficult for accountants or the teachers to recognize if you like made a mistake. So they allow you to use calculator. So we just simply use them. 3,328. So you may say, there is like some situations that maybe your calculator is running out of like electricity, or they are no longer available for you. So this time, like I will talk about something mathematics. We first deduct those two terms, and we can get this figure. And how to multiply? Just simply, uh, this is pretty difficult, but I think it is some way they can do it. It is simply like you use this use this one, of course, and you can get 3,328. Of course, this is if you think it's too difficult, then simply use your calculator, please. So this year we charge. We need to use another colors pen. 3,328. It is PFD, provision for depreciation of OE, office equipment. Okay, this is what? Expense. Correct. Expense. Okay, so now, after doing this, we also have some time. At September, secondly, so you may say income, like for those service businesses, how can they get income? They do get income from, their clients. So we have those three data. Fees, Owen, sorry, I don't need to use the red pen. Fees is owing from clients, 2,880. Now, fees this year, this is at 1 October 2017. It is during the year, during the financial year, fees from clients, 42,100. And currently, it is fees owed. It is 3,120. So how do we record the fees collected, which is income for this year? First, we need to recognize this term. It is simply recorded. So if there is fees, we can look at the first term, fees owed. So we simply add this, because just like what I have already said, we charge what? We charge the expense and income for 12 months. So those kind of fees, which is something I have to own in this financial year. So we just plus it. But you may say, sir, like how can you ensure that all these fees owed, you can maybe all collected? Well, this is something about, provision for doubtful debts, PFDD, or provision for bad debts. It is something we will record, but currently we just simply add this amount. We consider something like we may not able to collect it because, he or she was being bankrupt. So if we can understand this time, we can also understand this, because this 2,880 we collected this year, but it sure belongs to last financial year, so we need to minus this time. It belongs to last financial year, and we do record it last financial year, so we just simply do this. We use our calculator to calculate the answer. And okay, this is the second answer. It is for income. Right. Okay, so now we have already like prepared 2 terms, but it is still a long way to go. Just like what I have said, provision, provision for doubtful debts. Because you cannot expect like all amounts your clients owes you. You can like collect it in the next financial year. Because someone goes bankrupt, someone just forget about this transaction, and someone, in order to avoid you charging them, they may like just simply run away to other nations. And in these kind of situations, this is your loss. You no longer are able to collect those money from them again. So that's the reason why we provide provision for doubtful debts. Four, it's not off. Provision for doubtful debts. So how can we evaluate the amount in this financial year about how much like I would not able to receive next financial year? We just have a simple rate, like I will charge 10% rate because I do not no longer trust in my customers. And this really depends on like how much you trust your customer. If you trust them more, like the rate should be lower. So in this question, they do not mention the rate. It's a bit twist. So fees owing, of course, it's 1 October 2017. Fees owing, I have already written 2,880. PFDD, provision for doubtful debts, is 144. According to simple mathematics, we can get an idea of 5% was charged at the rate of PFDD. Okay, so there is a term that the provision for doubtful debts is to maintain at the same rate as the previous year. So this year, we have fees owing by clients, fees owing by clients amount to what? 3,120. So we just simply multiply by 5%. So how much is it? We still use our calculator. It will be our best friends. 156. So is this that straightforward that I can record 156 in the income statement? No. If you remember the format of provision for depreciation, we have this. Provision for depreciation, 144, 156. We like used it as an expense, so actually we need to minus those figures. 12. It is the actual expense of this year's provision for doubtful debts, because you expect 144 but you get 156, so it is 12 as a gap. So it is, okay, we have the third term expense, PFDD, 12, correct. The fourth is also like, because I need to be logic. You see, like this year, last year, we first used like how much they owed me, and also like provision with doubtful debt, and I can continue. Besides office equipment, it has also office furniture. Last year, it has furniture revaluation 11,100, and this year they further purchased 1,450. So which is, it should be the net book value at the beginning of this year. But now it's said that office furniture is depreciated using the revaluation method. That's something I have already mentioned. The office furniture was valued at 11,400 on September 2018. So it is what? We need to use those figures. After minusing, it is 1,150. This is what? This is the charge of depreciation. Depreciation of office furniture. OF. Expense. Expense. Of course, expense. And So what is the main expense for the service business? Of course, it's wages. Wages, it has 29,800, but it says uh like cash taken by Sadia, which is the business owner for personal use, was debited to the wage account. So actually, it do not have that much wage. We just simply like minus 3,500 because it is about drawings. It is like no business about the wage account. A wage account is something you give to your employees. So after minusing, we got 26,300. And what is this? What is this? What is this? It is the expense. Of course, expense for wages. And let me see if, oh, this one, rent. At 1 October 2017, we have prepaid amounts to 30 November 2017, which is 190. This amount is for 2 months. Prepaid, not accrued. And now, we also paid to 31 December. No. Got a wrong figure. 30 November 2018 for 12 months, but we paid 1,200 12 months. But if someone is carefully enough, you can see it is 95 per month, and now it is 100 per month. So we said that if we prepare income statement, we need to charge for 12 months. So how can we get the 12 month figure? Really straightforward. We get the first 2 months figure, and just the other 10 months figure. If they adjust money during the financial year, then we use the real actual cost. So it is 1,900. It is for what? It is for rent, expense, rent. Right? Correct. And general expenses, no adjustments. Great. It is something that we can finally record it. 1,775. Also expense. Also expense. And advertising. Another twist one. Advertising. But it's actually 3,150. But see what? It is for 15 months. So we deduct the figure, like it is 210 per month. And we charge for 12 months. It is 2,520. So the advertising fee for this, for this financial year, is 2,520. Okay, so I think now we have all the figures. So we just extract it. Okay, so first, it is income. We write fees from clients, right? It is the only income. So we have a check, fees from clients. Oh no, this is the provision with doubtful debt. Income 42340. 42340. 42,340. And we need to minus expense. We can first use rent. Up here, oh, serious mistake. What I have did. 1,190. This is 1,000. Yeah. That's great. So it is like 1,190. We have 2 columns. So this is the income column. We just simply copy it. Also we have general expenses. Right. 1,775. Then we have advertising. Just simply, simple copy. You will never do mistake. Never. Wages. We have wages. Provision for doubtful debt. Already said this is twist 112. And what we still do not record is depreciation. the OE office equipment, this figure. And for OF, we write it here. OF, it's 1150. So we make a check. All figures are recorded correctly. We got the figure in total, and we got the amount 6,065. It is for the profit for the year. And finally, we got the answer. A really difficult question without anyone like doing correctly in our form class. Okay, so now this is the end of the video. Thank you for supporting, and yes, everyone has a nice